We're now going to continue in Chapter 10 and talk about payroll liabilities. Payroll is probably the largest expense any employer will ever have. It's also the most complicated one because there are so many different state and federal and state regulations. And you yourself know as an employee, if they don't pay you what they're supposed to when they're supposed to, you're going to be very upset. So payroll is very important for any company because you want to keep a good employee morale. Because one bad employee will make 10 bad employees because they'll gossip about how bad you pay them, that you don't pay them on time, that you cheat them. So everybody has a story about payroll. So try to keep your questions to a minimum for this part of the lecture. Okay, so let's talk about payroll. Now, payroll is going to be broken into two different sections. I'm going to talk about it from the employee perspective and then the employer. So I'm going to have two different videos, payroll employee and payroll employer. So just so we understand when we're talking employee, there's two terms. It's either salary or wages. And you're going to use them based upon what they mean. Wages obviously usually is an hourly thing, and salary is more for managerial and administrative. So when doing the homework, if they call it salary or if they call it wages, you use the same actual term. In reality, they kind of mean the same thing, but you need to use the same actual term. So here's one rule that may very well surprise you. Most companies, all companies, have only one real rule, with the exception of FMLA and sick leave that's changed recently. Every company has to pay you time and a half if you work more than 40 hours per week based upon your contract. So it's a federal law that I have to pay you 1.5 times if you work more than 40 hours per week, unless your contract says otherwise. So that means, for example, my daughter is an RN in the ICU. She will work 3 12-hour shifts. None of that becomes overtime because her contract says you will work a 12-hour shift. So again, it's based upon your contract. If you were hired to work 4 10-hour days, none of those extra 2 hours per day is overtime because that's what you were hired for. So anything over 8 hours a day and or 40 hours a week, you're paid at time and a half. So we're going to look at my favorite employee. His name is John. His regular rate is $34 an hour. And anything over 40 hours per week is paid at 1.5 times. So for the week December 27th, he worked 42 hours. And here's how to calculate pay. 40 hours at $34, and then 2 hours at 34 times 1.5. So his overtime rate is $51 an hour. And so his total earnings are this. If you learn nothing else from this video, make sure you know how to calculate your pay and make sure you understand what's your overtime rate. So most overtime rates are time and a half. Sometimes you will see double time or triple time. By law, no employer has to pay you double time or triple time. So when my daughter works at the hospital on a holiday, she's paid triple time. So you do the math because that's $70 an hour at regular rate. So triple time is $210 per hour. So it can be quite well. So if a company's going to pay you double time or triple time, they're doing it because they want good employees. So remember, always know how much money you're making to make sure that you're getting the right thing due to you and the fact the employer calculates everything correctly. So I'm going to go over some very basic terms, and you may know about this, but I want to talk about it anyway. So gross pay, oops, let me get my little pointer. So gross pay is the total amount of money that you make per pay period. Once all of the deductions, and we'll talk about these deductions, are taken out, what you bring home is called net pay or take-home pay. So some of the normal deductions are federal income tax, and that would be referenced as FIT on your pay stub. or state income tax, which is SIT. You might be paying medical insurance. You might have other contributions coming out of your paycheck. So we're going to talk about this from the employee perspective. So the gross pay is the total pay your employer pays you. That is all your money. When these things come out of your paycheck, when these taxes are paid out of your check, it is your money being withheld by the employer on your behalf. And then you bring home the net pay. So how does an employer know how much FIT and SIT to take out? When you actually start a brand new job, your employer is going to ask you to fill out a W-4 form. Now, this is 2020, and they have changed it this year to make it way more complicated. But here's an example of previous year's W-4 form. So it's going to ask you important information, your name, your social number. But it's going to ask you, are you single, married, or married filing jointly? I'm sorry, married but hold out a single higher rate. It's also going to ask you how many number of allowances you're claiming. These are just allowances. All this is allows the government, allows your employer to know how much to withhold. So you have to be really careful. So here's some rules about W-4 that you might not know. You can change it as many times as you want during the year. Your employer cannot refuse you, and you can put any number down you want as total number of allowances. Now, keep in mind that you put a number down like 25, your employer will report you to the IRS for excessive withholding allowances. Now, if you didn't pay taxes last year, you can claim exempt. So this is actually you can claim exempt if you didn't have withholding last year and you didn't pay any taxes. So you need to read this. You need to know how to fill it out. But it's very important. You can change it as much as you want. You can put whatever you want down. An employer cannot refuse to accept it. So this just kind of talks about everything we talked about. This is definitely something you should consider looking into. If you're getting a big refund, it's because you're having too much withheld every payday. Well, some of us love big refunds, especially if we're getting checks from the government. But do you really want a big check at the end, or wouldn't you rather have extra money in your paycheck every week? So that's something you have to decide. Okay, so we're going to talk about employee taxes, things that come out of your paycheck. The biggest thing you're going to see is called FICA tax. And under FICA, you're going to have Social Security and Medicare. And so these payments that come out of your payroll for this are not monies you will get back. The only refund you're going to get back is federal income tax or state income tax. These have to be withheld no matter what. And right now, Social Security for textbook is running at 6% of your earnings. Medicare is 1.5% of your earnings. So in real life today, Social Security is 6.2 and Medicare is 1.45. So these come from 6% of your gross wages and 1.5% of your gross wages. So let's take a look at my friend John, good old boy. Here he is. So he made $14.62, 6% of that. So his Social Security tax will be $87.72. His Medicare tax is $21.93. So his total FICA tax is $109.65. Again, you can look at your pay stub, look at your gross earnings, multiply it times 6.2, and it should match your FICA Social Security that's on your pay stub. I dare you to check it out. I dare you to look at your pay stub. Make sure it's accurate. So other than this and other than federal income taxes, there's other things that can be withheld. These are called voluntary deductions. Taxes are mandatory deductions. So let's take a look. We talked about this. Gross earnings, gross pay minus the deductions equals net pay or take-home pay. So here's what John is actually bringing home. So here's what he's done. He wants $20 taken out for retirement, $5 for a united fund, and here's his federal income tax. In previous additions to this textbook, you actually had to calculate this from a tax table. Starting with the 14th edition, they always tell you the federal income tax. But this is a whole nother class on how to do this. It's called payroll accounting. So here's his gross wages. Here's his Social Security, his Medicare. Here's his FIT, federal income tax, his voluntary deductions. So I'm going to add them all up. They equal 392.60. Subtract that from his gross pay, and here's his take-home pay. So if you kind of rounded this whole scenario here, rounded this to 1,500, rounded this to 400, and this would be 1,100. He's bringing home a little. He's bringing home a little bit more than 2/3 of his gross pay. So this is how his pay stub would look. So this is calculating the employee portion of payroll. There are two major components, employee and employer. On the next video, we'll actually examine the employer portion of payroll.